Good morning, guys, and welcome to another episode of AM Daily Crypto. As always, I am a Crypto Lissa, and we will be talking about 3AC this morning, or Three Arrows Capital. But we have a little new thing that we wanted to show you guys that I had worked on a couple days ago, and we've just been playing around, so that's why I haven't had a video up in a couple of days. But let's try this out. Hopefully you guys like that. So first up, I've got 5 articles that we will read through right now. So first one is by Mackenzie Salos. Of course, this is CNBC. From 10 billion to zero, how a crypto hedge fund collapsed and dragged many investors down with it. As recently as March, Three Arrows Capital managed about $10 billion in assets, making it one of the most prominent crypto hedge funds in the world. Now, the firm, also known as 3AC, is headed to bankruptcy court after the plunge in cryptocurrency prices and particularly risky trading strategy combined to wipe out its assets and leave it unable to repay lenders. The chain of pain may just be beginning. 3AC had a lengthy list of counterparties or companies that had their money wrapped up in the firm's ability to at least stay afloat. With the crypto market down more than $1 trillion since April, led by the slide in Bitcoin and Ethereum, investors with concentrated bets on firms like 3AC are suffering the consequences. Crypto exchange Blockchain.com reportedly faces a $270 million hit on loans to 3AC. Meanwhile, digital asset brokerage Voyager Digital, which I did do an emergency video on Voyager, filed for Chapter 11 bankruptcy protection after 3AC couldn't pay back the roughly $670 million it had borrowed from the company. U.S.-based crypto exchange, crypto lenders Genesis and BlockFi, crypto derivative platform BitMEX, and crypto exchange FTX are also being hit with losses. Credit is being destroyed and withdrawn. Underwriting standards are being tightened. Solvency is being tested. So everyone is withdrawing liquidity from crypto lenders. Of course, everybody is getting their crypto the hell off of exchanges, because right now, who in the hell knows what is going to be next? So it said Nick Carter, a partner at Castle Island Ventures, which focuses on blockchain investments. Three Arrows' strategy involved borrowing money from across the industry and then turning around and investing that capital in other, often nascent crypto projects. The firm had been around for a decade, which helped give founders Zhao Su and Kyle Davies a measure of credibility in an industry populated by newbies. Zhao also co-hosted a popular podcast on crypto. Quote, 3AC was supposed to be the adult in the room, end quote, said Mick Bhatia, a professor of finance and business economics at the University of Southern California. Court documents reviewed by CNBC showed that lawyers representing 3AC creditors claim that Zhao and Davies have not yet begun to cooperate with them, quote, in any meaningful manner, end quote, which we will get to another news article about this. The filing also alleges that the liquidation process hasn't started, meaning there's no cash to pay back the company's lenders. Zhao and Davies didn't immediately respond to requests for comment. The fall of Three Arrows Capital can be traced to the collapse in May of Terra USD, or UST, which had been one of the most popular US dollar pegged stablecoin projects. The stability of UST relied on a complex set of code with very little hard cash to back up the arrangement, despite the promise that it would keep its value regardless of volatility in the broader crypto market. Investors were incentivized on an accompanying lending platform called Anchor with 20% annual yield on their UST holding, a rate many analysts said was unsustainable. Of course, Terra USD, 3 Arrows Capital, Genesis, Voyager, BlockFi, Blockchain, FTX, BitMEX, and Deribit. Quote, the risk asset correction coupled with less liquidity have exposed projects that promised high unsustainable APRs, resulting in their collapse, such as UST, said Alexis Shaw, global crypto and digital asset strategist at Bank of America. Panic selling associated with the fall of UST and its sister token Luna cost investors $60 billion. The quote, the Terra USD and Luna collapse is ground zero, end quote, says USC's Bhatia, who published a book last year on digital currencies titled Layered Money. He described the meltdown as the first domino to fall in a, quote, long, nightmarish chain of leverage and fraud, end quote. 3AC told the Wall Street Journal it had invested $200 million in Luna. Other industry reports said the fund's exposure was around $560 million. Whatever the loss, that investment was rendered virtually worthless when the stablecoin project failed. UST's implosion rocked confidence in the sector and accelerated the slide in cryptocurrencies already underway as part of a broader pullback from risk. 3AC's lenders asked for some of their cash back in a flood of margin calls, but the money wasn't there. Many of the firm's counterparties were in turn unable to meet demands from their investors, including retail holders who had been promised annual returns of 20%. Quote, not only were they not hedging anything, but they also evaporated billions in creditor funds, end quote, said Bhatia. Peter Smith, the CEO of Blockchain.com, said last week in a letter to shareholders viewed by CoinDesk that his company exchange, quote, remains liquid, solvent, and our customers will not be impacted, end quote. But investors have heard that kind of sentiment before. Voyager said the same thing days before it filed for bankruptcy. Bhatia said the cascade hits any player in the market with significant exposure to a deteriorating asset and liquid crunch, and crypto comes with so few consumer protections that retail investors have no idea what, if anything, they'll end up owning. Customers of Voyager Digital recently received an email indicating that it would be a while before they could access the crypto held in their accounts. CEO Stephen Eldridge said on Twitter that after the company goes through bankruptcy proceedings, customers with crypto in their accounts would potentially receive a sort of grab bag of stuff. That could include a combination of the crypto they held, common shares in the reorganized Voyager tokens, and whatever proceeds they're able to get from 3AC. Voyager investors told CNBC they don't see much reason for optimism. Not surprised. We'll just kind of leave it at that. I'm really not surprised, guys. Next one, 3 Arrows. Oh, lordy. 3 Arrows liquidators ask U.S. court to force crypto founders to cooperate. Rutgers representatives for 3 Arrows Capital, or 3AC, have asked a U.S. bankruptcy court in Manhattan to force the cryptocurrency hedge funds founders to participate in the liquidation proceedings, saying they can't be located and have blown off requests for necessary information. The court scheduled an emergency hearing on Tuesday to address concerns raised by the company's liquidators. Singapore-based 3AC, which was reported to have $10 billion in cryptocurrency earlier in 2022, held $3 billion in assets as of April, according to the liquidators' court filings. The company filed for bankruptcy in the British Virgin Islands in late June after being hammered by a sharp sell-off in digital currencies. 3AC's insolvency has destabilized other crypto lenders like Voyager Digital, which filed for bankruptcy after 3AC failed to repay a loan of approximately $650 million in cryptocurrency, and Blockchain.com, which loaned $270 million to 3AC. 3AC's liquidators Russell Kumpler and Christopher Farmer said in a Friday court filing that they cannot locate 3AC founders Zhao Su and Kyle Livingstone Davies. Crumpler and Farmer were appointed by a British Virgin Island court to represent the company, wind down its operations, and repay creditors. They filed a parallel bankruptcy case in New York in order to shield 3AC U.S. assets and gain international recognition of liquidation proceedings. The liquidators said Su and Davies have not yet begun to cooperate in liquidation effort, and that they are not only concerned about delays to their work, but the, quote, actual and imminent risk, end quote, that the founders or other parties will whisk away 3AC's cryptocurrency assets. They are demanding immediate access to 3AC's Singapore offices and information about 3AC's bank account and digital wallets. The liquidators said they have had Zoom and email communications with a Singapore law firm purporting to represent Zhao and Davies, but they could not be sure they were actually reaching the founders. On a recent Zoom call, Su and Davies' names appeared, but their video was turned off and they were on mute at all times. Neither answered direct questions on the call, according to the liquidators. They also said they stopped by 3AC Singapore office, but could not enter because the door was locked. Mail had piled up unanswered by the door, and neighbors said no one had been in the offices since late May or early June, according to the court filing. Zhao is attempting to sell a Singapore mansion that could be worth tens of millions of dollars, according to the court filing. The case is in Three Arrows Capital U.S. Bankruptcy Court for the Southern District of New York. For the liquidators, Adam J. Goldberg of Latham and Watkins. So there's that. I mean, I don't know. I don't see it going well for them. So obviously that's that one. Zhao and Kyle Davies from Three Arrows Capital do not cooperate, court filing. And this is written by Chinika Deka. The lawyer seeking an emergency provisional relief said the founders of the Bledgard hedge fund Three Arrows Capital are nowhere to be found and have not yet begun to cooperate with foreign representatives in any meaningful manner. The nearly decade-old hedge fund was founded by former schoolmates and Wall Street currency traders Su Zhao and Kyle Davies. Up until April this year, the firm had nearly $3 billion in assets under management, or AUM. However, after getting liquidated on many of its long positions, 3AC was ordered into liquidation by a British Virgin Island court last month. According to the most recent filing with the U.S. Bankruptcy Court for the Southern District of New York, the lawyers involved in the proceeding said that the hedge fund founders have not been cooperative in the proceedings so far, and that their whereabouts are unknown. Quote, the foreign representatives understood and believed that while the debtor has had certain operations in Singapore, Mr. Davies and Mr. Zhao's current locations remain unknown. They are rumored to have left Singapore, end quote, which I'm not surprised because they don't want to pay back the money. The lawyers acting on behalf of the creditors also said that persons identifying themselves as the two co-founders attended an initial call via Zoom, the filing mentioned. However, the duo's video and audio turned off and their respective legal representation answering questions on their behalf. Speculations emerged if they were actually present during the proceeding. I don't think they were. Moreover, the lawyers also found 3AC Singapore office to be abandoned and added that people in the adjacent offices observed staff recently as May or early June of this year. So they knew it was happening, and they pretty much got the hell out, is what I'm seeing. After the unraveling of 3AC in mid-June, Zhao and Davies stayed away from Twitter. The latter did confirm that the company was looking for a bailout, but has remained relatively quiet since then. Zhao was also reported to be seeking to sell his Singapore mansion worth $35 million. The luxury mansion was purchased in December 2021 via a trust fund in the name of one of his children. It was put up for sale as a private deal for an undisclosed amount. Lawyers are concerned about the transfers of 3AC assets, which mostly consist of cash, cryptocurrencies, and NFTs. It is important to note that dozens of high-priced NFTs belonging to Three Arrows backed Starry Night Capital were reportedly to have been transferred to a single wallet. Before freezing the firm's assets, the lawyers asked the court to subpoena the co-founders and have them furnish details regarding their wallets, bank accounts, derivatives, contracts, securities, and other company records. Not surprised. I mean, this is a little ridiculous. A New York judge freezes assets of Three Arrows Capital as crypto firm's founders remain underground. A federal judge in New York bankruptcy court has frozen the remaining assets of the crypto hedge fund Three Arrows Capital following the firm's rapid fall from prominence. The fund, founded nearly a decade ago, managed $10 billion in assets, which we know just a few months ago. Now its two co-founders are in hiding from angry creditors who are trying to recoup some of their losses. Prior to bankruptcy filing, a court in British Virgin Islands ordered that the Bludgeon Fund liquidate in order to pay back its debt. Judge Martin Glynn of the Southern District of New York granted the emergency motion on Tuesday to freeze Three Arrows Capital assets. CNBC joined a court hearing which covered next steps in the bankruptcy process. Glynn noted in the written decision that only the assigned bankruptcy liquidators have the authority to, quote, transfer and encumber or otherwise dispose of any assets of the debtor located within the territorial jurisdiction of the United States, end quote. As part of Glynn's ruling, global advisory firm Teneo, which was assigned to manage the liquidation, was also granted permission to subpoena Three Arrows co-founders Zhao Su and Kyle Davies, as well as banks, crypto exchanges, and other institutions and firms that have done business with them. The chief concern is that Three Arrows Capital, known as 3AC, and its leadership team might be siphoning funds ahead of the formal liquidation. CoinDesk reported that Zhao is looking to sell his $35 million Singapore property, and there are reports of at least one other digital asset transfer of a non-fungible token held by the fund. Quote, a key part of this motion is to put the world on notice that it is the liquidators that are controlling the debtor's asset at this stage, end quote. Adam Goldberg, an attorney representing Teneo, said in Tuesday's hearing. Zhao and Davies did not respond for a request to comment, which they're not going to. Their lawyer, Christopher Ann and Daniel of Singapore-based Advocatus Law, also did not respond to CNBC's request for comment. Of course. So we're just going down. Obviously, we've heard about all of this. But, I mean, it's pretty bad considering that 3AC is in the hole. So, with that, guys, I hope you have a wonderful day. It is Wednesday here, currently, and I will see you guys on the next one.